Welcome everybody. I hope you are watching my channel and I hope you are getting benefited by it. I had told you that I will come up with a sum where I will talk about the concepts of new adjustments which will be done today. Now, in my previous lecture, if you have seen very carefully, I had taken a sum in which the partners had balances in their current account. We will do the same thing over here, but here we will actually talk about some more important things. So what are we supposed to talk about in today's sum? We will be talking about the adjustment of the capital. We'll see how the partners adjust their capital. Number two, we'll also see about the salary and commission, not only pay to employees but also pay to the partners as well. So here is a sum in which there will be set of commissions and set of salaries given to partners as well as employees. And finally, we will do a conditional adjustment of the commission which will be payable to the partners. So keep watching. Just see how we go along with this new sum. In this question, we can see that there are three partners, Ed, Fred and Greg, and their capital balance is 2,50,000, 1,50,000 and 1 lakh respectively on 1st of April 2019. They decide to make their capital equal from 1st July 2019 and decide that the capital of the firm will be 6 lakh from now. If the capital is 6 lakh from now, that means each partner's contribution will be 2 lakh each. The excess to be withdrawn and the shortfall to be brought in. Now this line itself means a lot because you can see over here Ed has 2,50,000, so he will withdraw 50,000, while Fred and Greg both has to bring in money. Fred will bring 50,000 and Greg will bring 1 lakh. On 1st April 2019, their current account shows the following balance: 2,000 for Ed, 5,000 debit balance for Fred and 7,000 debit balance for Greg. So two partners have negative balance and one partner has a positive balance. Here please understand that the debit balance means a overdrawn or a negative balance. They distribute the profits in the ratio of 8:7:5. That means the profit sharing ratio is 8:7:5. All the three partners have withdrawn 2,000 per month. So it has been said very clearly that the partners have withdrawn 2,000 per month. Ed has withdrawn the money in the beginning of every month, while Fred and Greg have withdrawn at the end of the month. The following informations are given. Number one, manager is given a salary of 8,000 and salesman is allowed a commission of 8% of net profit after charging such commission. 8% of the net profit after charging such commission. The net profit was 1,16,000 before giving salary and commission. Now over here, please understand very carefully that first from 1,16,000, 8,000 needs to be subtracted as a salary, and then the commission, that is 8 by 108, has to be taken into consideration because the word has been used over here after charging such commission. Next, a very important information: 20% of the share of distributable profit to the partners will be transferred to general reserve. Up till now, we have not yet done a sum in which we have transferred the distributable profit to general reserve. Here we are transferring 20% of the distributable profit to the general reserve. That means before distributing the final profit among the partners, 20% of the distributable profit will be transferred to the general reserve. Fred will be paid a salary of 8,500. Interest on capital will be 6% per annum. Interest on drawing will be 8% per annum. Commission is paid to Greg at 10% before interest on drawing, but after all appropriation. This is very important. Whenever you are talking about before, that means 10% interest will be calculated directly, and over here we can see that this sum asks us to calculate several things. Number one, it asks us to calculate the interest on capital. It asks us to calculate the interest on drawing. It has asked us to calculate the commissions. Here you can see the commission has been paid not only to the salesman, the commission has also been paid to the partner. So here one commission is a charge and another commission is an appropriation. Repeat again, one commission is a charge and another commission is an appropriation, which we will see when we solve the sum. After reading the long question and carefully analyzing it, now let us go on for the calculations. If we have read the question very carefully, we have come to this information that there are three partners, Ed, Fred and Greg, who had the initial capital of 2,50,000, 1,50,000 and 1 lakh at the beginning of the year, and on 1st of July 2019 the partners decided among themselves that the capital will remain fixed and the total capital of the firm will be 6 lakh, which will be divided equally among the partners. Indirectly speaking, that each partners will have 2 lakh as the capital, and it is also mentioned in the question that the excess will be withdrawn and the shortfall will be brought in. That has been shown over here. If you see very carefully, we have seen over here the partners, that is Ed, Fred and Greg, as a capital with 2,50,000, 1,50,000 and 1 lakh, and you can see on 1st of July 2019, Ed has withdrawn 50,000, Fred has brought in 50,000 and Greg has brought in 1 lakh. Why have they done this? They have done this to make their effective capital as 2 lakh. You can see it. Now let us calculate the interest on capital at the rate of 6%, which is mentioned in the question for the first partner, that is Ed. You can see over here 2,50,000 is the amount which is given for 3 months for 6 by 100. Why I have done 3 months? Please understand that very carefully. I have done it for 3 months because from 1st of April to 1st of July is 3 months, and therefore I will calculate the interest on 2,50,000 for 3 months. Is it very clear? So let us cancel the zeros first. Let us cancel this and this. We'll get a 2 over here, and we now cancel and we get 1250 into 3, so it gives us 3750. Now after the 1st of July, see very carefully, each partner, after 1st of July, each partner will have exactly 2 lakh, and that will be there for 9 months. Repeat again, that will be there for 9 months. So we can see over here 2 lakh into 9 by 12 into 6 by 100. Taking that calculations which we are doing over here, we can see over here the amount will become 9,000. So this will remain constant with all the partners. That is 9,000 will remain constant with all the partners, because from 1st of July 2019, all three partners, Ed, Fred and Greg, will have the same balance, that is 2 lakh. Now let us move on to the second partner, which is Fred. Now what was the initial capital of Fred? 1,50,000. Okay, so 1,50,000 into 3 by 12 into 6 by 100 will give us a figure of how much. Just let us check it. You can see over here 750 into 3, we get 2,250 plus the 9,000, which will remain constant for all the three partners, because from 1st of July 2019 the capital balance of all the three partners will become 2 lakh. Okay, so we are calculating interest on 2 lakh for 9 months for all the three partners, and that is basically becoming 9,000. You can see over here. So his total interest on capital is 11,250. See very carefully, 11,250, and that for Greg. Now we calculate that for Greg. What will be the interest on capital of Greg? Let us see that. That is 1 lakh into 3 by 12 into 6 by 100. I hope you can understand this. It is given 1 lakh over here. So we are cancelling out the zeros. We are cancelling out the 6 and 12. We are getting a 2 over here. So if you cancel over here 750, and you can see over here, sorry, 500 to 3, we are getting 1,500, and 1,500 plus 9,000, we are getting a figure of 10,500. So very carefully watch this. What we have, the interest on capital of the three partners, 12,750, 11,250 and 10,500. After the calculation of interest on capital, now we'll move towards the calculation of interest on drawings. Okay, now we see over here the three partners, that is Greg, Fred and Ed. has drawn 2000 per month. The first partner has drawn 2000 per month at the beginning of every month, and the second and the third partner has drawn 2000 per month at the end of every month. So taking that into consideration, we will now calculate the interest on drawing of both the partner, rather the three partners, but we need only two calculations. Why? Because you can see Fred and Greg has actually drawn at the end. So if we do the calculations only twice, that will be done. See, first we'll do it for whom? For N. And Ed has drawn how much? 24,000. How? 2,000 per month, 12 months in a year, 24,000. And you can see what is the percentage mentioned? 8%. And what will be the time? It is at the beginning of every month. If you remember the formula, beginning of every month will be 6.5 months. So we are calculating it for 6.5 months. By 12, let us cancel the zeros over here. Let us cancel the 12 and 240. So we get a 20 over here. So if you see 20 into 8, 160 into 6.5, it is giving us a figure of 1040. It is giving us a figure of 1040. So the interest on drawing of Ed is 1040. Now the interest on drawing of both Fred and Greg will be a similar figure, that is 24,000 into 8 by 100 into 5.5 by 12. So now if you calculate that part, see very carefully, we are cancelling the zeros over here, cancelling the 12 and this, we are getting a 20 over here. So if you have 20 into 8 into 5.5, that is giving us a figure of 880. That is giving us a figure of 880. Now we have come to this conclusion that the interest on drawing for Ed is 1040 and the interest on drawing of Fred and Greg is 880. So with these figures, now we'll move on to the profit and loss appropriation account. But in this question, you have to very carefully see that before we transfer the profit, there are two things which has to be subtracted from the profit. One is the commission and one is the salary which is paid to the manager and the accountant. They are the employees of the company and these are the charges against profit and they have to be subtracted from profit first. Therefore, the profit and loss appropriation account will have the profit minus the compensation paid to the as a salary and as a commission to the accountant and the manager. After doing the required calculations, now I have come up with the preparation of the profit and loss appropriation account. You can see that I have written some figures in the profit and loss appropriation account. I have already transferred by net profit, that is 1,16,000. I have done a minus 8,000 and I have done a minus something. I'll show you because there is a commission has been paid. The commission has been paid after charging such commission and the salary. The salary has already been deducted at 8%. If you remember, the commission to salesman has been given at after charging such commission and the salary. The salary is shown over here. So if that statement is there, so we'll calculate it 1,16,000 minus 8,000, which gives us 1,08,000. Now the commission to the salesman is 8% of this. Okay, so 1,08,000 after charging such commission, the denominator will become 108. As I have explained to you in my earlier sums, whenever the word after is used, the denominator is added with the percentage of commission. So the percentage of commission is 8%. You can see over here I have already added it. Now let us cancel this and this. We are getting 1,000 over here. So it is 8,000. Now this subtraction is another 8,000. So if we have subtracted from 1,16,000, 8,000 and 8,000, we get a profit of 1 lakh. Okay. Now please go to the debit side. You can already see that I have actually written down the figures of the interest on capital which we had calculated, remember, but I have not written the interest on drawing. There is a reason behind it, because there is a commission which is being given to Greg, okay, for which the interest on drawing does not have to be taken. If you see the question, this question has commission paid to both commission paid to a salesman, and commission paid to one partner, which is Greg over here. So let us see what is the total interest on capital. If you see over here, 12,750 plus 11,250 plus 10,500, we add that, we get over here 34,500. Yes, we get 34,500. Now this is the amount which we have for the interest on capital. Now please see very carefully, the commission has been given to Greg, is it clear, based on the calculations of these two. Is it clear? So what is the amount you can see, and commission to Greg is before charging such commission, so we'll directly find out the percentage. Now please see over here, 1 lakh minus 34,500 and minus 8,500. If we add 34,500 and 8,500, we actually end up getting a figure of 42,000. So 43,000, not 42,000, 43,000. So 43,000, 1 lakh minus 43,000, we get 57,000. See very carefully, 57,000, and the commission which is being paid to the partner, that is Greg, is 10% of it, that is 5,700. Now we have come to the calculation of commission paid to Greg, that is 5,700, and now we will transfer the interest on drawings over here, because the question had actually made it very clear that Greg will get a commission after taking into account the interest on capital and salary, and before charging such commission. Before means we'll directly find the percentage, which we have done over here, that is 5,700. Now let us move on to the credit side, and let us write by interest on drawing account. Remember, we had Ed, we had Fred, and we had Greg, and the interest on drawing, if you remember, 1040, 880 and 880. So this was the interest on drawing of the three partners, 1040 for Ed, 880 for Fred, and 880 for Greg. So if we add that, how much do we get over here? 880 plus 880 gives us 1760. 1760 plus 1040 gives us 2800. So over here we have got the interest on drawing at 2800. After all these treatments, we'll now calculate the general reserve, which is an additional information in the question. We have not done a question up till now where general reserve is there. You can see very carefully the question has stated that 20% of the distributable profit will be transferred to the general reserve, and remaining profit will be distributed among partners in the ratio of 8:7:5. So first let us find out what is the distributable profit, then we'll calculate 20% of that, which will be the general reserve, and after that whatever is remaining will distribute among the partners in the ratio of 8:7:5. But let us first add over there. You can see we have just two figures, so 1 lakh and 2,800 gives us a figure of 1 lakh 2,800, and now we have 1 lakh 2,800. From that, if we subtract over here, if you add these two, we are getting a figure of how much? We are getting a figure of 43,000, and 43,000 if you subtract it from that, then we have 5,700. We are getting a figure of 54,100. 54,100, 20% of that will be transferred to the general reserve. You can see very carefully. So we are having 10,820. 10,820, that is 5410 into 2, that will be transferred to general reserve. So we have 10,820 transferred to the general reserve. After that, we will have the share of profit to be transferred to three partners. So from 54,100, if we subtract 10,820, we are left with a figure of, you can see very carefully, we are left with a figure of 43,280. So this 43,280 is the distributable profit. 43,280 is the distributable profit, which will distribute among the partners in the ratio of 8:7:5. So three partners, they will be getting the distribution in the ratio of 8:7:5. So the first partner, if you see 43,280 divided by 20, the first partner will get 17,312. Now again divided by 20 multiplied by 7 gives us 15,148. Repeat again. So we have 43,280 divided by 20 multiplied by 8 giving us 17,312. Next one, again 43,280 divided by 20 multiplied by 7. I hope you are understanding how we are doing it, because we add 8 plus 7 plus 5, we get over here 20. We have divided 20 and we have found out 17,312, 15,148, and the last partner 10,820. So this is the distribution of the profit which has to be clearly understood. So 2 share of profit, and we have 3 partners, Ed, Fred and Greg, and we have distributed it 17,312, 15,148 and 10,820, and if we add this we get a figure of 43,280. So this completes the preparation of the profit and loss appropriation account. What was different in this question in comparison to all the other questions which we have done up till now? First difference over here was there was a commission which was paid to the salesman, and the commission was paid after charging such commission, which has given us this 8,000. Remember, there was a salary also paid to the worker. So over here there was a salary, there was a commission which we have taken into consideration. Next we had a commission to Greg also. Here the commission was after charging such commission, here the commission was before charging such commission. If you remember, we had actually got a figure of 57,000 by taking what? By taking this 1 lakh and subtracting these two figures from it. Is it clear? We had got 57,000, and from that if you calculated 10% commission which was payable to Greg, it came to 5,700. After that, the main thing in this question was the calculation of the general reserve, which actually we had got a profit of 54,100. On that we calculated 20% to get the general reserve as 10,820. 10,820 was the general reserve which we got. After that, we subtracted from 54,100 10,820 to get a figure of 43,280, and we distributed that 43,280 in the ratio of 8:7:5. That means we divided 43,280 by 20, multiplied the same with 8 to get 17,212 and 15,148 and 10,820 respectively. After completing this long profit and loss appropriation account, now we'll move on to the capital account and current account of the partners. Now, as the capital account is fixed, we are supposed to prepare two accounts, which is the capital account and the current account. First, I'll finish with the capital account and then I'll move on to the current account. You can see I've already drawn the capital account and current account for you with the set format. Date, particulars and the name of the three partners are Ed, Fred and Greg, which is given both in the debit side and the credit side respectively. Now let us concentrate on the posting. The first posting you can see over here, I have already taken the balance as on 1st of April 2019, and the balance was 2,50,000 for Ed, 1,50,000 for Fred and 1 lakh for Greg. Remember, they had decided on 1st of July 2019 that they would have their capital balances as 2 lakhs. Is it clear? So now somebody will actually have to bring in money and somebody will withdraw money. Who is withdrawing money? You can see Ed is withdrawing money. So over here 1/7/2019, right over here in the debit side to bank, and in Ed's account write 50,000 because Ed is withdrawing 50,000. Similarly, on 1st of July 2019, by bank, there are two partners who are bringing money. Fred is bringing 50,000 and Greg is bringing 1 lakh. So you can see very carefully now the total of the partners. Here we are having 2 lakh, here we are having 2 lakh, and here we are having 2,50,000. Now please go to the debit side and on 31st/3/2020 write to balance carried down 2 lakh to all the three partners. 2 lakh to all the three partners, that is 2 lakh to Ed, 2 lakh to Fred, and 2 lakh to Greg. What is the total? The total of the first partner, see very carefully, is 2,50,000, while the total of Fred and the total of Greg is 2 lakh each. This concludes the capital account, but will not keep the balance over here. To balance carried on will be brought forward over here on 1st of April 2020 by balance brought down and with the figures of 2 lakh, 2 lakh, 2 lakh for each part. So this concludes the capital account. After that, we'll move on to the current account. If you remember that the current account has balance which is shown that 1 has a positive balance and 2 has negative balance. We'll just see how the current account is prepared. After preparing the capital account, we'll now focus into the current account. You can see very carefully that I have posted all the figures in the current account. The current account starts on 1st of April 2019 with 1 positive balance and 2 negative balance. You can see very carefully that Ed has a positive balance of 2000 and there is a negative balance of Fred and Greg 5000 and 7000 respectively. In current account, partners can have a debit balance also. So you can see over here that Fred and Greg are having a debit balance of 500 and 5000, 7000 respectively. Now, these all entries have been taken from the profit and loss appropriation account. If you remember, that is, they were in the debit side and they have been transferred to the credit side of the current account. Why? Because the partners are maintaining a fixed capital system. So over here you can see we have the interest on capital 12,750, 11,250 and 10,500. Then we have a salary of 8,500 given to Fred. One of the partners was given a salary and one of the partners was given a commission, if you remember, which we had calculated before charging such commission, and the commission had come to 10% of 5,700, which was the 10% of 57,000, which was 5,700. After all the calculations and transferring 20%, repeat, after doing all the calculation and transferring 20% to general reserve, we got a profit which was distributed in the ratio of 8:7:5, and we have done that distribution. You can see by share of profit 17,312, 15,148 and 10,820 given to Greg. Now let us focus our attention to the debit side, where we have basically 2 entries only. One is the drawings. Every partner had drawn 2,000 at every month, so 24,000 was the drawing. But the difference was that Ed had drawn at the beginning of every month and Fred and Greg had drawn at the end of every month. So you can see the interest on drawing 1040, 880 and 880 respectively. Now after doing that, the next step, as you know, is to add. So we can see over here the total 2,000 plus 12,750 plus 17,312 gives us a total of 32,062, and from 32,062 if you subtract 25,040 you end up getting 7,022, which is a balance which has come in Ed's account. Similarly, Fred, the total, if you see over here, 11,250 plus 8,500 plus 15,148, the figure we get is 34,898. So 34,898 minus the figures given over here, that is 29,880, gives us a figure of 5,018. Now in this case, Greg has a total in the debit side which is heavier than the total in the credit side. You can see the total over here is coming to 31,880. That is the sum total of 7,000 plus 24,000, which is 31,000, plus 880 is 31,880. From that we have subtracted 10,500, 5,700 and 10,820 to get a figure of 4,860. This is not all. We have to transfer the entries, if you know very carefully. 1st of April 2020 by balance brought down, transfer these entries 7022 in Ed's account and 5018 in Fred's account, and 1/4/2020 to balance brought down in the last partner 4,860.
After doing all these transfer entries and going through the capital account and current account, we come to the end of this sum, which was a very long sum, which you can see that we have gone through many stages. Here we have actually seen the transfer to the general reserve. Here we have also seen commission not only paid to the employees but commission also paid to the manager, and commission paid to the partner as well. So one was commission before charging, one was commission after charging. Salary was given to one of the employees, salary was given to one of the partners, you can see it, and the profit was distributed in the ratio of 8:7:5. Keep watching my channel. I will come up with more sums on this chapter, and in my next video we'll be talking about a sum with fixed capital with more type of distributions. So we have come to the end of the preparation of the capital account. I hope you've understood everything about it. And next we will go on to the successive lectures, in which I will tell you about the adjustment of the close account and the minimum profit guarantee to a partner, which we'll be seeing very soon. Keep watching my channel. Thank you for watching.